Many observers credit the term product-market fit to Mark Andreessen and his VC firm. The concept is famously used by Silicon Valley venture capitalists like Andreessen Horowitz and Sequoia Capital, and their influence has been massive. Search for the term on Google, as I did a few days before putting together this presentation, and you'll see hundreds or even thousands of hits from would-be business consultants trying to cash in on their success. There are inevitably huge numbers of nifty illustrations, like the one displayed on this slide. Billion-dollar startups that venture capitalists want to invest in are exceedingly rare. For venture capitalists themselves, it makes sense to get picky when you're trying to find unicorns, which are, after all, mythical creatures. Too often, academics at business schools and professional regulatory bodies that between them design vocational training programs and the licensing requirements for new entrants into the accounting services industry tailor their course offerings and competency maps to our largest businesses. They're also a little too fond of unicorns, which, as I just said, are really mythical creatures. At the Small Business Analysts Society of Canada, we believe it's important to understand the real needs of small businesses with fewer than 5 employees. In Canada, fully 84.02% of private sector businesses are made up of the self-employed, and what statisticians disparagingly describe as micro-businesses with fewer than 5 employees. Obviously, their needs and capabilities are much different than the remaining 16% of private sector firms in Canada. In other words, we embrace the notion of product-market fit. We believe that academics at business schools and the Big Four audit firms that dominate the accounting services industry don't understand the importance of our smallest businesses, or perhaps more accurately, they are too busy with their own self-interest to give a hoot about them. There's a kind of duality or split in the accounting services industry in Canada and worldwide. While the largest global audit firms profoundly influence the professional associations that regulate members in public practice, the business models, services offered, and clients of these large firms are fundamentally different than the vast majority of very small firms that serve 95% or more of Canada's businesses. Based on transparency reports published by the Big Four audit firms in 2024, it is estimated that management consulting has increased to approximately 40% of Big Four revenues in Canada. While the professional monopoly extended to regulated accountants derives from the need for impartiality in financial audits, the diversification into management consulting and taxation threatens their impartiality. According to a 2018 study by CPA Canada, 55% of public accounting firms are led by sole practitioners. Most of these have few employees, and our analysis shows that more than half work from home offices. The same study shows that approximately 60% or more of all CPA firms have between 1 and 5 employees. Undoubtedly, most skew to 1 or 2 employees, including the practitioner. So, most public accounting firms are led by sole practitioners, and a great many of these work from home offices. The technologies and business processes used by these small firms are very different from those used by the largest 30 firms, which together account for 73% of industry revenue. At SBA Canada, we've developed a technology stack designed for the processes used by small firms working with their small business clients. For their part, professional bodies typically describe the services provided to small businesses somewhat disparagingly as a combination of bookkeeping and tax preparation work, thereby failing to meet professional standards for competency training. At SBA Canada, we like to refer to tax and compilation services as a combination of indirect or sales tax, income tax, and ad hoc systems design. We note that these 3 areas combine the specialties of 3 different specialist groups in large firms. Taken together, we would say that they represent a unique skill set that should be recognized as a separate specialty. Anthropologists and cognitive scientists have identified a prestige bias, whereby humans preferentially pay attention to imitate and affiliate with individuals who are perceived as prestigious or successful. Research suggests that even highly educated critical thinkers are not immune. Andrew Michael Spence is a Canadian-American economist and Nobel laureate who is credited with developing signaling theory. According to Spence's theory, for the model to work, it is not even necessary for a university education to have any intrinsic value if it can convey information about the prospective employee to a potential employer, as long as the signal is sufficiently costly. Thus, self-reinforcing interactions ensure the dominance of both national professional bodies and our university sector. However, we argue that they do little to enhance the vocational value of business school curricula for accounting professionals working with small businesses. While we believe that critical thinking becomes more important as professionals develop and gain experience during their careers, we would argue that this is of little value until new entrants have developed their technical competencies. Pursuing a liberal arts education as a commitment to continuous professional development or lifelong learning is potentially very valuable as practitioners work with and eventually train others. However, the current model involves indoctrinating students with business school orthodoxy and neoclassical economics. These suggest that conformity is more important than critical thinking skills.